Breaking economic news, existing home sales rose 4.7% in September to a 5.55 million annual rate, bouncing back from August's 5% drop. It is the second highest rate of sales since the housing bubble burst. We count the annual turnover rate of existing homes to be in the normal zone, with sales of 5 to 5.5 million. All regions saw greater sales. The biggest market is in the South, and sales rose 3.8% to 2.21 million, about 40% of the nationwide market. Northeast sales were up 8.6%, Midwest up 2.3%, and the West up 6.7% to 1.27 million. What's happening with home prices? Single-family home prices dropped 2.8% in September to $223,500. Relax. Prices drop every September at the end of the summer. The important thing to note is that home prices are up 6.6% from last year, obviously eclipsing those stagnant wages for the average American worker of about 2% the last year. The National Association of Realtors continues to note a persistent lack of inventory for buyers to choose from. If this trend continues, it suggests prices will go to all-time record highs in the spring of 2016. What else? Weekly jobless claims remain near the lowest levels since the 1970s. Unemployment claims are 259,000 in the October 17 week, little change from rock bottom lows of 256,000 in the October 10 week. It is hard to spin a story of a weak economy with unemployment claims at such low levels. It indicates there is little slack left in the labor market, as indeed most of the Fed believes. Finally, given unemployment is 5.1% today, and their estimate for full employment is a mere 0.2 away at 4.9%. There are 2 monthly reports left before the December 16 meeting, and we expect the unemployment rate to fall another 0.2 to the Fed's new goal line before they meet. Net, the latest economic data today, existing home sales and weekly unemployment claims continue to show that the U.S. economy is not slowing materially despite the market fears about softer growth in China. Every other crisis to come to the U.S. from overseas has not become a full-blown crisis until it causes companies to start reducing their headcounts. This is not happening, so we believe the Fed remains on track to raise rates in December, as indeed Fed Chair Yellen indicated would be her vote in her September 24 Amherst speech. If you are a saver, it looks like savings rates will be moving up finally at the end of the year. Good news indeed. Savers have lost 8 to 10% of their savings as inflation since 2008 has eroded the purchasing power of the dollars left on deposit at zero rates for so many years.